stock of the day, can't go past Ansell, falling from COVID grace after slashing its FY22 guidance as supply chain disruptions and resetting demand weigh on expectation. Company anticipating EPS to now be $1.45 instead of $1.95. Margins expected to be lower in the first half due to the challenges, supply chain issues pushing costs higher. Ansell down 15% at the moment. It was down 24% at one stage. Not far off its, or a hell of a lot off its 52-week high of $44. So here's a stock that's almost halved in price. Nathan, what did you think of the update and the stock price now?
I think the update for me is more about what's happening in emerging markets. We kind of knew that from the data we were seeing. We see a substantial risk in emerging markets, and we see even bigger risk going forward with what's happening with the Fed. Pandemic problems are going to last through 2022 at best. It's not going to solve itself in emerging markets. So we saw that risk. But I am surprised at the amount or the magnitude of the downgrade. But reading through it, and I'm still reading through the details, but from what we can see, it's more macro rather than operational. So I'm always looking past those things because they tend to be something that you can get around. And Ansell is one of those things where in a COVID environment, yes, they're affected by COVID. Yes, they're affected by supply side issues. This is going to be a thematic for everyone. There's no one unaffected. Now, but for Ansell, COVID is actually positive because remember, when it got to 40, everyone was thinking this is COVID forever type thing. But what people forget is what Ansell does is the health standard. That's going to be around a lot longer than what people think. So the demand for it is big. They're a very low part of their cost base for the customer. So they can put up prices and people will live with it because they're proven guys through the cycle. So yes, and they're very good management. They're spread around the world. They, I love them for that. They've done really well. I'll back the management to turn it around. We've been through this, through the cycle. So it went up. We thought it was expensive, but we held it. It's come back. It was cheap. The bashing has made it extra cheap.
Right.
I think it's a buy. I actually had a couple of clients give me a call because we liked it and said, what do you think? I said, you buy it here.
Right.
Because it was a couple of bucks off pandemic lows. There's nothing wrong with the model. There are, obviously macro is going to hit everyone. And so get ready. This reporting season, you're going to see a lot of downgrades. And so in that context, I'm not surprised. Why would you sell something that's already downgraded and buy something that's going to downgrade? You know what I mean? I'll buy this.
So this is what you two have always talked about. With big corrections, you load up on quality stocks.
And
you're
it
just
has 4.5% short.
Okay.
Right? If you're a shorter, you've done well. And you'd be covering it. So it's you've got all the criteria: good quality business, good management, good macro. It's getting hit by a macro event that everyone's going to get hit by. Opportunity.
Gaurav?
Yeah, we own a bit of this, and it is a high quality business. I think a lot of people fail to see the quality inside Ansell because it is capital intensive. It is a hostage to input prices. It always has been, but it's managed those variables really well in the past. It has made an error in the last, I'd say, 6 to 8 months. Now, we all know about all these supply shortages. So what they did to counter that is that they increased inventory levels much more than they ordinarily would. So they make sure their customers are well supplied. They run through their product really, really quickly. And it's vital. When you have an agreement with a hospital or with a manufacturing business, you must be able to supply. So they wore high inventory costs. And what's happened is that demand has just kind of leveled off a little bit. And so they're stuck with a lot of inventory that margins are probably going to be compressed for a little bit, and that reflects the lower earnings. And at the same time, you've got costs being hit as well. So the costs are rising as well. So you've got this double whammy, and it's a pretty nasty compression of margin. But I do think both of those things are short-term issues. This is a fundamentally very strong business. They're in 1 or 2 in all their major categories. There is a large part of this business that still deals with generic gloves, but the best margins, most of the money here is in high spec, high value gloves that you can, and I think Nathan's right, the test is going to be coming up soon. I think they're going to have to raise prices, and I think you're going to see the volumes hold up reasonably well. We've seen this happen in the past. It does get these drawdowns from time to time, and I think we're going to be okay. It's a buy for me as well. This is
Okay.
extremely attractive on valuations for a big blue chip. Not the fastest growing business, but high quality with good management and decent balance sheets. So I
Good.
don't mind.
But this is the kind of macro stock that you want to buy
Yeah.
in the market you're going into for the next couple of years. It's going to be tough.
Mm.
Returns are going to be weak. You got to fight for everything. Opportunities come in high quality business. Don't look back.
Yep. Okay.